Are you ready for next week? Next week is packed with so many events that you can pretty much throw technical analysis out of the window. We have macroeconomic data, jobs data, we have a bunch of these mega cap trillion-dollar companies reporting earnings. So my overall recommendation for next week is either you completely skip trading next week, let all the dust settle and then start again, or you take one trade every day based on what the markets are doing. Starting Tuesday, things are going to get really crazy, and let's look at the macroeconomic calendar here. So Tuesday we have a bunch of jobs data coming out next week, and jobs data is the focus right now for the Fed because any hints of a recession will start showing up here. So we have job openings on Tuesday. We have ADP employment report, very important, on Wednesday, and GDP on Wednesday. Okay, and then as if that's not enough, we have PCE coming out on Thursday. So that's your inflation data, which the Fed really cares about. That's their preferred gauge of inflation. They do pay attention to CPI and PPI, but everything feeds into this core PCE. That if next week just had this much stuff going on, that would have been enough to drive anybody crazy. On top of that, we have earnings coming up. And let's look at the earnings calendar and see what's going on. Okay, here you go. As you can see, the week is loaded with earnings. I mean, there is a bunch of stocks from our watch list reporting earnings. But what we are mostly concerned about is what's happening between Tuesday and Thursday. On Tuesday, we have Alphabet reporting earnings. That's going to be a huge market mover. Now, right above Alphabet, we do have AMD, and we are in a AI chip bubble. So any stock which is remotely related to semiconductors does move Nasdaq quite a bit. It could be AMD, AVGO, Broadcom, anything. AMD will have some effect on the markets, but I think that will be overshadowed by Google or Alphabet on Tuesday. So that's after market close on Tuesday. On Wednesday, we have Microsoft and Meta, both of them reporting earnings. That's another huge day. And then finally on Thursday, we have Apple and Amazon. I mean, how crazy is that? On top of all this macro data, you have all these mega cap companies, the Mag 7s, reporting earnings next week. So that's why I said your investing method could just be a coin flip. Take a trade on Tuesday after you see ADP employment data and GDP. On Wednesday, markets could turn around 180 degrees, and take another trade on Wednesday based on Google earnings. Then comes Thursday, everything changes again after Microsoft and Meta. So that's the nature of things next week. So that's why I said you could either completely avoid trading, just focus on your existing trades, doing the trade management, or you could just take one trade every day based on what's happening in the market. So if markets drop on Tuesday, you take a bear put. If markets go up on Wednesday, you take a call spread to balance it out. It's up to you. I mean, really, that's the best advice I can offer for next week. A quick look at some of the charts in focus. So because of all these multiple binary events coming up next week, you can't really rely on technical analysis. But let's look at the charts anyway. So if you just look at SPY, SPY is in a slow melt up operation. So it's going up every time very slowly. No signs of a pullback yet. Same thing is QQQ. It's just going up, and Tesla earnings gave the markets a huge push. And although some analysts are saying that do not trust the spike in Tesla stock, that will probably get sold off. So, but the thing is, it gave markets a huge boost, and Qs are still going up in a melt up operation. And the only interesting thing is, if you look at Dow Jones, Dow Jones is actually, let me switch to a shorter time frame so you can see this clearly. So Dow Jones is actually dropping. So after Tesla earnings, Dow opened green and went up like, I don't know, 150 points or something, and then it just sold off the rest of the day on Friday. And you can see it's heading down. All the indicators that I use, RSI is dropping rapidly. We are nowhere near oversold zone, so there is more room to fall. We have a DMI crossover happening, and as you know, on the indices, the market indices, DMI crossovers are usually considered significant as they signal a trend change. So this is one DMI crossover. Look at the previous DMI crossover here, where the DI plus crossed DI minus and market just took off. You can keep going back and see here there is a pullback on September 5th, another DMI crossover. These crossovers are considered very significant, and they signal a trend change. So we are seeing one of these crossovers. Of course, with all these indicators, you always have false signals all the time. But at least on the market, on SPY, QQQ, DIA, all these DMI crossovers are pretty reliable. So at least on Dow, we are seeing that it's indicating further downside. What else is indicating further downside? I've been pointing this out for weeks now. So DXY, US dollar index, DXY is constantly going up. This is very negative for the markets, equity markets. DXY is inversely correlated to the markets. Another signal is 10-year treasury note. So the TNX has also been rising constantly, and that is another divergence indicator for the markets. So TNX started rising on September 17th. Now let's look at what happened with SPY on September 17th. So on September 17th, market was going up, and they have been going up all the way till October 25th. So it's been a month since these divergence indicators started showing up, and these things take time to resolve. So whenever you see divergence like that, all I can say is just get cautious. That's it. I mean, it doesn't tell you that tomorrow the markets are going to drop or change direction, but just slow down your trading volume. That's the best you can do. Same thing when markets get overbought, you just slow down your trading volume. So those are the signs of divergence I'm seeing. But again, next week's market outlook is actually really easy for me because there is no technical analysis to be done. All I'm showing you is there are signs of divergence all over the place. Markets are unable to maintain any spikes after earnings. Any post earnings spikes are getting sold off. That usually indicates a correction is coming up. So that's one. Dow Jones is already showing a DMI crossover. SPY and QQQ on the other hand are still going up. Now, given that next week the Megcap earnings are all lined up, and if all these companies paint a rosy picture, good forward guidance, revenue beat, earnings beat, then forget about all this. Markets will continue to go up. Now, I'm in a very interesting position right now because I was sharing this with my wife earlier that as you know, my trading algo, the trend following trading algo is live, and it's just sitting there waiting to take a trade. The way I've developed the algo, it is very patient. So it will not take a trade until it finds the exact perfect setup. And if you look at the back test that I've published in our group, 10 years worth of back tests, there are times when it doesn't do anything for 1 month, 1.5 months, It's just waiting for the right moment. But when the right moment comes, then it starts taking trades, and then that's why you have those the results I've published, the 70% win rate, 75% win rate, even 85% win rate. That happens by waiting for the right moment to show up. So right now I launched the algorithm last Sunday. So I'm officially live, but it hasn't done anything. It's just waiting for the it thinks that the markets are in a pullback right now and it's not the right moment to take a trade. But if all these mega caps report good earnings, I think it will take its first trade sometimes next week. Now, of course, if the mega caps report disappointing earnings, then the algorithm will continue to be in wait and watch mode. In our Discord group, of course, I'll be taking more put spreads if that happens, but the algorithm prefers, since it's a trend following algorithm, and the best way for a trend following algorithm is to ride the trend up instead of because as you know there is a phenomena called bulls take the stairs up and bears take the elevator down. So when markets drop, they drop suddenly, and there is not enough time. You can make money in those moments. Like in our group right now, we are doing pretty good with our put spreads, but the drops happen so suddenly that you cannot make sustained profits in a bear market. You can make sustained market in a bull market by riding the trend. So the algorithm prefers a bull market, and whenever markets drop, it goes into waiting mode and then starts engaging again when it sees that the pullback or correction is over. Having said that, subscribe to my channel because the next video I'll be publishing is a review of 2021 back tests with my algorithm, and I'll walk you through all the trades and what it did, and is it behaving the way I expect it to behave. So stay tuned for that.